We talk about that contraction in the economy, yet we have a stock market that's surging at a record right now. What do you make of the gains so far? Is it sustainable? Is it worrying?
So the contraction at 7.7% is better than what people are expecting earlier. People are expecting double-digit contraction, given that in the first quarter itself, the economic growth was, I think, more than 20% negative. So from that market, as you know, was always, the reality versus expectations. And 7.7%, given that the first quarter was a complete washout, is still better than what most people were prepared for. And what we are seeing now is quarter on quarter, month on month, there's almost a V-shaped recovery in most of the sectors. The sentiment is better. And fortunately for India, the pandemic second wave or the current situation of COVID is not as bad. Numbers are falling, touch wood, and we hope that this trend will continue. And I think the sentiment is coming back, and also government, RBI did a lot to improve liquidity, improve sentiment, provide money at the bottom of the pyramid so that the consumption cycle continues. So all these factors are playing out. And on top of that, if you see 2020, then India has seen record inflow of foreign capital, portfolio investment, the FIIs or FPIs that invest in India. So all these things put together, right, I think something good.
But some say valuations are looking pretty stretched. Where do you see opportunities? Perhaps mid, small caps?
Yeah, I think going forward, mid and small caps should do better. But my personal view is that people should be, there'll be a new normal in the valuations. In fact, as the interest rates go down, we always see that equity valuations go up. I mean, theoretically, they start with a reciprocal of interest rate and then you adjust for growth and risk. So given that situation, I think a valuation will find a new normal, which is slightly higher than what it was. Last 5 years, there was continuous earnings downgrade. First time we are seeing that analysts have to upgrade their earnings, whatever they are forecasting, actual results in Q2 and maybe more so in Q3. What I mean Q3 is December quarter, which has just ended. So there's a positive momentum in earnings, and therefore I'll not be surprised if the valuations maintain at a higher level. Having said that, I think, as you said, small cap and mid cap now should rally. They always follow, they always lag. And valuations there, when we talk about mid cap and small cap, is a fairly large universe. So you really can't paint it with one brush, but so if you're talking about 500 or 1,000 stocks, you can always find deep values, and I think that is what investors will look for.
What's helping liquidity is not just foreign inflows, but also retail investors. In fact, 5 million new retail investors. How is this playing out? Is there cause for concern?
I think, yeah, it's a very interesting phenomenon. And I think this is something which has happened in the US and other developed markets as well. That in the pandemic, retail trading and investment has gone up significantly. But as far as India is concerned, I think there may be a short-term blip, but longer-term trend is very clear that equity investing will rise, and the reasons are very simple. Today, banks offer you deposit of 2-3%, or even if you make a term deposit, you can't get more than 5% for 2 to 3 years, which in Indian context probably won't protect you against inflation. So until now, if you see the flow of the incremental money that Indian households invest in equities is just about 1% of GDP. So Indian retail investors are grossly under invested in equities. But obviously, it won't be a straight line rise. Equity markets have a tendency to be volatile, and some of the retail investors that get into derivatives without much understanding of the market, run the risk of burning their fingers. I mean, it happened in the past, and that can happen again. But still, if you see the long term, when we look at things, say 5 years later, the number of investors can easily, triple or even be more than that.
Nirmal, I mean, the thing is, with all these players coming in with such minimal, how could I put it, commission charges, nothing whatsoever to be made if you're buying direct stocks. I mean, you have to rely on derivatives, and that's where some money could be made. How are you reforming your business in order to perhaps make money now with regards to the environment changing so much in your industry?
Yeah. So we have IIFL Securities, and then there's another entity, 5paisa, which is a discount broker. So we want to be very clearly focused on the type of customers that we are targeting. So the discount broker, if the one discount broker's success has led to a kind of a herd mentality and everybody's getting into that space. But what we are looking at is that what is unmet need of the customer. Customer doesn't need a product or a broking account, but he needs a solution for his investment, for his savings to be invested so that the risk-adjusted return is better than what he would have done on him or on his or her own. And that is what we are trying to. So if you look at IIFL Securities, we are trying to focus more and more on providing investment solutions to the customers, which may be direct equity, mutual fund, fixed income, and a mix of it, rather than just chasing the wave of discount broking. Where I think in India the brokerage, when they say discount broking is 10 rupees or 20 rupees per order, the taxes are significantly higher than that. So your impact cost in any case is much more. And investors, when they're looking for, say, 15 to 18% return, it really doesn't matter to them to cut down on cost. But obviously, there are different segments of customers. So if you are targeting the new millennial who want to invest, then obviously they need advice and handholding. But then there's a segment of customers who are traders, they're high volume traders, and for them, brokerage matters. So they basically will go for discount broking. And I think every broker will have to find out the niche segment that the broker wants to target. Then only, it'll be a successful business model.
Many investors now are looking towards this budget, which is at the beginning of February. Very, very quickly, there's much anticipation of higher spending. What's the best way to perhaps actually play this here, Nirmal?
I think budget will be, what you're saying is absolutely right. So, sorry for that. I think the cyclicals, metals, capital goods, engineering, cement stocks, they're still relatively undervalued. And agriculture will be the focus because I think farmers have been, and the government has to take care of farmers in rural India significantly, given the fact that, there's a large constituency of voters, as well as recently there have been, the issues related to the reforms of the agriculture. So I think there'll be a lot of focus on agriculture, rural India, increasing farmers' income, and therefore you'll see that, from the investor's point of view, if you really want to play the budget thing, then one is the related to rural, which can be either rural consumption or fertilizer or seeds, agriculture, related product, pesticides, everything is part of that. The second theme can be that government probably will put
Nirmal.
a lot of money through budget on infrastructure, and that I think will see probably the companies that are into road building or construction or even again agriculture like irrigation, power, and again and the third
Nirmal.
theme I look at is the metals, steel.